Good afternoon. Today we're going to do accounts receivable cutoff as of December 31st, 2021. This is going to be very similar to what we did at the end of chapter 14. Accounts receivable, we're going to audit the last 25 entries and the accounts receivable trial balance prior to December 31st. We're going to vouch from the accounts receivable trial balance to the supporting invoice, shipping document, sales order, purchase order, just like we did for sales and vouch and trace. If the shipping document indicates the goods were actually shipped in December, then we have evidence that they can recognize the revenue and the receivable because they have satisfied the performance obligation. If the shipping document indicates the goods were not shipped until January, then they should not have recognized the receivable or the revenue in 2021. If we go out to the loading dock and we audit shipping documents, again, we're going to assume if it's dated December 31st, 2021, we can assume it was actually shipped in December. We've got the blue-green game going on again. The black divider, everything to the left was actually shipped in December. Everything to the right, the green documents were actually shipped in January. If we're at the loading dock, we're going to audit the first 25 shipments made in January. We're going to trace from the shipping document to the invoice, to the accounts receivable trial balance, and the sales journal. If the receivable and revenue are recorded in January 2022, we have evidence that the receivable and revenue are recognized in the correct period. If the goods were shipped in January of 2022 and the receivable and revenue are recorded in the 2021 sales journal and the 2021 accounts receivable trial balance, we have evidence that the receivable and revenue are recognized in the wrong period, and receivables and revenues are both overstated for 2021. While performing substantive tests, we detect misstatements. The client does not correct their financial statements, so we'll issue either a qualified or adverse opinion. For the test, you need to make sure you know what do I need to change in the report if I issue a qualified opinion. If the misstatement can be compartmentalized, then I will issue a qualified opinion. I don't need to change the first paragraph. I do need to change the opinion paragraph in our opinion, except for the effects of the matter discussed in the basis for opinion section. Except for that, the financial statements present fairly. I'm going to add a paragraph to the basis of opinion section explaining the misstatement. I'll have my standard regular we conduct an audit in accordance with general accepted auditing standards, and we believe our evidence is sufficient and appropriate. We'll have that standard paragraph as part of our basis for opinion section. In this situation, we do not need an emphasis of matter paragraph. Responsibilities of management paragraph never changes, and in this instance, we don't need to make any changes to the auditor's responsibilities section. If the misstatement is pervasive, and it can't be compartmentalized, then we'll issue an adverse opinion. Again, the first paragraph's unchanged. In our opinion, because of the significance of the matter described in the basis for opinion section, these financial statements do not present fairly. On basis for opinion, I need to add a paragraph explaining the issue. The standard basis for opinion paragraph is follows. No need for an emphasis of matter paragraph. Management's responsibilities never change. And in this situation, there's no need to make any changes to the auditor's responsibilities section. Make sure for the test that you can go through and identify the changes that are necessary for qualified opinion or adverse opinion for a material misstatement. Cash cutoff, December 31st, 2021. Cash receipts journal, we're going to audit cash receipts and cash disbursements separately. Cash receipts, we're concerned about occurrence and overstatement. We're going to audit the last 25 entries in the December 2021 cash disbursements journal. We're going to vouch from the cash receipts journal to the December bank statement. If we can vouch the last 25 entries in December's cash receipts journal to the December bank statement, then we have external evidence that they actually received the cash in 2021 and the transaction occurred in 2021. If you vouch the last 25 entries in the December cash receipts journal to the January bank statement, then you have evidence that they did not receive the cash in 2021. Make sure you remember that last cash receipt in 2021, the December 31st cash receipt, will probably be a deposit in transit and will most likely show up on the January 2nd bank statement. I didn't say that right, did I? Most likely show up as a deposit on the January bank statement dated January 2nd. If you vouch the last 25 entries in the December cash receipts journal to the January bank statement, you have evidence that cash receipts and cash are both overstated. With cash receipts, we're worried about that red 200. They recorded that cash receipt as if it occurred in December. We want to make sure that it actually did occur in December, that they actually received the cash in December. Cash disbursements, we're concerned with understatement, we're concerned with completeness. We will audit the first 25 entries in the January 22 cash disbursements journal. We're going to vouch from the January 22 cash disbursements journal to the bank statements, the January 22 and the December 21 bank statements. If a check from the January cash disbursements journal appears on the December bank statement, we have evidence from an external source that they actually wrote the check in December of 2021. 2021 cash disbursements journal is not complete, and cash disbursements are understated and cash is overstated. If a check on the January cash disbursements journal appears on the January bank statement, it provides some limited evidence that they wrote the check in 2022. Limited because most checks written on December 29th, 30th, or 31st won't actually clear the bank until January of 2022. With cash disbursements, we're worried about that 300 and the 190. Yes, they recorded them as if they were written in January. We want to make sure that they were written in January and not written in December.